When you are a shareholder within a personal and family company, there are numerous ways to take money from your business. A popular and tax-efficient method is paying yourself a small salary and taking the remainder via dividends. But what is the optimal salary for you? The optimal salary will depend on whether the employment allowance is available to protect any employer's national insurance liabilities. There are many advantages to taking a small salary. One of the main benefits of taking a smaller salary is that the year remains a qualifying year for national insurance contributions and the state pension. You need 35 qualifying years to be entitled to the full state pension. For a year to count as a qualifying year, earnings must be equivalent to at least the lower earning limit. As a director, there is an annual earning limit. For 21-22, the annual lower earning limit is set to £6,240. For shareholders who are not directors, earnings for each earning period must be equal to at least the lower earnings limit. For 21-22, the weekly and monthly thresholds are £120 and £520 respectively. Generally, personal companies are unable to claim the allowance. If a business has a sole employee who is also a director, the employment allowance is unavailable. In 21-22, the maximum salary that can be paid without attracting any employee or employer's national insurance is £8,840. This is equal to the secondary threshold. If you pay yourself this amount, there is no personal tax or national insurance to pay, but the full £8,840 is deductible from the company's taxable profits. This reduces the corporation tax bill by £1,680. If there is more than one employee on the payroll within a family company, then the employment allowance would be available. This allowance reduces the company's employer's national insurance liability by £4,000 per annum. Where the employment allowance is available, the allowance would shield the employer's national insurance liability due as long as it is not already being used to cover the NI for the other employees. The optimal allowance in this case will be the personal tax allowance. This is set at £12,570 for the current tax year. You will pay employees national insurance on this amount, a total of £361. However, the corporation tax bill has now been reduced by a total of £2,388, giving a net saving of £2,027. You want to earn more than the minimum salary, and hopefully your company has more cash it can pay you. You will take this as a dividend. A dividend is a sum of money that is paid by a company to its shareholders out of its profits or reserves. There is also a dividend allowance, which allows you to take the first £2,000 of dividends tax-free each year. So the optimum way to take cash out of your business is to take a salary of £8,840 and then take the rest as dividends. If you're not the sole director or employee, you are able to take a salary of £12,570 by claiming employer's allowance and then the rest as dividends again. If you'd like to know more, please get in touch with us. I hope that's useful. If you'd like to see more videos where we answer lots of questions on tax and accounts, take a look at our YouTube channel. You can also subscribe for more videos.